Good morning, ladies and gentlemen. Welcome to CBRE's 17th annual Melbourne Market Outlook Breakfast. It's always very flattering to see so many faces here early in the morning, so your presence here is greatly appreciated. The scope of our presentation today, firstly thanks to Cathay Pacific, direct from Hong Kong, Nick Axford, our Regional Director of Research and Consulting for Asia Pacific, will give us the CBRE Global View. That'll be followed by a more specific Melbourne Market Outlook presentation by our National Australian Head of Research, Stephen McNabb. And then we go to our expert panel, moderated by Ari Petrovs, our National Projects Director. Well, 2013 certainly begun with a rush for the property investment markets. The lull that we usually associate with January was noticeably absent this year. The momentum of the last quarter of 2012 has certainly carried over into the first quarter of 2013. Is that purely the weight of capital that's out there at the moment? Can it be finally that the fundamentals for income growth are in place for a recovery from the GFC that we've all been experiencing for so long? Hopefully some of those answers will be presented this morning. So it's my pleasure, without further ado, to welcome to the stage Dr. Nick Axford.
Thanks, Matt. Good morning, everybody. From Hong Kong. I was actually in the UK last week, so thank you for turning the heating up here. I could do with a bit of warming up. My job is to kind of set the scene, to talk a bit about what we see happening in Asia Pacific, what we see happening in the world, and how we think that's affecting property markets around here. So, starting with the basic outlook, we anticipate that the global economy is kind of bottoming, that will start to pick up a bit as we go through this year. That'll be led by the Asia Pacific region, in fact, particularly by growth in China. With the US sort of staging a bit of a recovery, starting to see some traction coming through there, and Europe obviously lagging a bit. The even casually observant of you who were here last year will notice, for anybody who's seen me presenting at any stage over about the last 3 years, will notice that that's exactly what we've been saying time and time again about over the last 3 years. In fact, at the moment, from an economic, from a political, from a property market point of view, in a wide variety of ways, we're getting a huge sense of déjà vu, and not for the first time. Because a lot of the things that we're thinking about and talking about are similar to the sorts of things we've been thinking about and talking about. And particularly, the last few years have had a habit of Q1 starting positively. We get through because everybody comes back really positive, and then something starts to happen to derail that optimism. To illustrate the point, this is actually a slide taken directly from the presentation I gave here last year, in which we identified that we expect things to pick up a bit in the second half of the year, subject to a number of things happening. Firstly, we needed to make sure that the Eurozone stayed intact. Okay, well, yes, it has. In fact, very, very little has actually changed in Europe, apart from the ECB has said, we're not going to let Europe fall apart, and the Germans haven't stepped in to say, not with our money, you don't. In practice, not a lot has changed, but from an emotional point of view, the existential threat that sat over the very existence of the euro seems to be coming off the table. The belief is that the euro somehow will survive. And in the US, we are seeing continued signs, not particularly strong, but continued signs of some kind of recovery. China has indeed, it seems, put off what looks like an inevitable rebalancing of the economy at some point. There are still concerns about the Chinese economy, but the rate of growth does seem to be bottoming out, and we're expecting somewhere around 8% growth this year, which is more than enough to generate quite a lot of momentum across the regional economy. Elections we highlighted as a potential threat that could destabilise the emerging improvement. That was all going really quite well. We got through a lot of major elections, and then the dear old Italians wandered onto the scene. They say that a nation gets the politicians it deserves, which doesn't say an awful lot for the Italians. Quite how Silvio Berlusconi is still out of jail, let alone playing a leading role once again in Italian politics, is absolutely beyond me. And you know, in some ways you could just sit and laugh and smile at it if it wasn't for the fact that it really is fundamentally quite important. You only need to look at how the financial markets reacted to the inconclusive nature of the Italian elections and the prospect of Berlusconi coming back. The bond spreads for many of the southern European nations that had been narrowing suddenly started widening again. And that shows the fragility of the situation that we're in. So, you know, there are various other issues about the Middle East and all sorts of other things. And you know, at the moment, we're just keeping our fingers crossed that these sorts of things are not going to derail what once again looks like a year where we're not going to see exceptional growth, but we are going to see the start of a genuine rebuilding of global economic activity and foundations that we can move forward on. So all I need to do is say, actually, it's now the second half of 2013 where we're expecting to see some kind of real improvement. And it is still the case that sentiment has been so negative over the last few years that in many cases, once we do start getting all of this stuff lining up, we could well see a bit of a bounce. So from an economic point of view, I don't want to cover the detail here. Stephen's going to talk about Australia in a minute. The key thing is that although in some cases 2013 might be a bit slower, 2014 at the very least is expected to see quite a sharp recovery. In many cases, 2013 will represent an improvement on last year. And if you look over on the right-hand side, the Asia-Pacific region, and certainly particular parts of that region, are expected to see a sustained improvement. Certainly if you strip Japan out of these numbers, Asia in general, Asia-Pacific, will see a pretty sustained recovery and will outperform the rest of the world. Now, from a property market point of view, starting by looking at occupiers, clearly the uncertainties in the world have had a significant impact on particularly multinational, international occupiers over the last few years. You can see that the net absorption has remained positive. A lot of that's down to what's going on in China and in India. We are still seeing positive net absorption, but it's at a much slower rate than we were seeing. Vacancy, partly due to that slower net absorption, partly because in a lot of markets we are seeing quite a lot of development coming through. So vacancy has actually stabilised and in fact in many cases is starting to just trend upwards a little bit. That is feeding through into a stabilisation of rents, not everywhere, but across most markets. So less momentum from a rental point of view, more uncertainty from occupiers because they're still not convinced about the outlook for the world. And therefore, right the way around the world, actually the positive rental recovery that we were seeing in this case in office markets has slowed quite significantly. And it's not just about office markets. One of the notable features of the Asia region is the very, very strong growth that we see in the consumer side of the economy, obviously rising affluence, a growing middle class, and that is fueling significant increases in retail sales. That in turn is fueling a lot of interest from international retailers arriving in the region, and interestingly, some of whom are starting to come in and target the Australian market, which isn't something that historically we've tended to see a huge amount of. In Australia, obviously a slightly different pattern. These are percentage growth rates, so that acceleration of Asia-Pacific, Asian retail sales is quite significant. Clearly things have moderated over the last couple of years here in Australia, but as Stephen will refer to, we do see that just starting to bottom out and hopefully turning the corner. So, a reasonably optimistic but still cautious and uncertain environment. And again, this is a slide that I was using a couple of years ago in 2011 when we thought that things were starting to recover. That this very strong risk-off environment that we've been in right the way across the investment and corporate world, that's kind of off now. That extreme risk aversion has gone away.